First tonight then, BHP Billiton and the mining giant, like the minnows, is feeling the squeeze. Profits for the year still came in at a whopping $15.5 billion US, but that's down more than a third on last year. Uncertainty about the real levels of Chinese demand and steep falls in commodity prices have taken their toll, along with rising capital costs. Olympic Dam has been shelved and there are question marks about other big capital projects, and the company has also written down its recently purchased US shale oil assets. Here's Andrew Robertson.
Resources is a cyclical business and BHP Billiton is now feeling the heat of the downside. As commodity prices tumbled, revenue rose less than 1% to $72 billion. Net profit, though, was off 35% to $15.4 billion.
A very robust set of financial results that were achieved despite significant volatility and uncertainty in the external environment.
A breakdown of key commodities shows how that volatility made life tough for the big Australian. Earnings from iron ore, petroleum and coal for energy were up, but from there profits tumbled. Base metals down 42%, metallurgical coal 41%, aluminium 209%, diamonds and specialty products 66%. The softness in commodity prices has prompted BHP to bow to shareholder pressure and review its huge capital expenditure program, announcing it will postpone the expansion of its Olympic Dam uranium and copper mine in South Australia.
It became clear that the right decision for the company and its shareholders was to study an alternative, less capital-intensive design of the Olympic Dam open pit expansion that involves new technologies.
It's a decision which, in the current economic climate, didn't surprise the federal government.
Potentially the pit is as big as the South Australian CBD in terms of Adelaide. And I might say you're talking about removing overburden for a period of about 5 years, which means a huge capital outlay before you turn a quid.
In Adelaide, though, the mood wasn't quite so forgiving.
If they do want to develop that, they're going to have to seek the permission of this community, a community that has been disappointed on 2 occasions and will be very wary about the 3rd occasion they sit down to have discussions with this company.
As commodity prices fall, BHP Billiton has also written down the value of its US Fayetteville shale gas assets by nearly $3 billion, assets that were only bought last year.
And Andrew Robertson's here in the studio with me now. Andrew, this is such a massive story, I think. Olympic Dam is not the only project that BHP might be putting on the back burner.
Well, absolutely, Ticky. A project that wasn't mentioned by name in tonight's profit report was the $20 billion planned expansion of the outer harbour at Port Hedland in Western Australia. What tonight's report did say is that BHP is currently building 20 projects around the world with a combined value of $23 billion. The report also said that no new projects are expected to be approved for the 2013 financial year, which on the surface it seems will rule out the expansion of Port Hedland. The Jansen Potash project in Canada, also not mentioned tonight. One project that was mentioned, though, is the Peak Downs coal mine in the Bowen Basin in Queensland. Plans for a 2.5 million tonne per year expansion, like Olympic Dam, now on the back burner.
Gosh, this means a lot about jobs, I would think. But how has this result been received in the market?
Well, it seems to have been received quite well. Most analyst comments that I've seen tonight say the result was in line with market expectations. In fact, one analyst that I spoke to described it as, in his words, an outstanding result. He pointed to BHP's strong balance sheet, $24 billion in cash flow, a strong pipeline of projects, and that big increase in the dividend, up 11% to 112 US cents a share. The decision to defer capital expenditure, which we've just been talking about, has been welcomed. Analysts are seeing it as BHP finally acknowledging that economic circumstances have changed. The write-down of the shale gas assets in the United States was expected. However, the uncertainty in the global economy has led to Marius Kloppers not painting a rosy outlook for the short to medium term, and as a result, BHP shares down around 2% in tonight's trading in London.
There's been a lot of talk about Marius Kloppers being under pressure. Do you think this has changed anything at all, this announcement?
Well, as I've already noted, investors have welcomed the fact that BHP is now deferring capital expenditure and finally acknowledging that the economic situation has changed. So that's a positive for Marius Kloppers. There were nearly $3 billion of write-downs of those US shale gas assets, which is a black mark. But the analysts that I spoke to made the point that they were bought in a falling market, and it's as hard to pick the bottom as it is to pick the top. And those assets are now primed to take advantage of the recovery in US gas prices, and they have already stabilised. Although the big miners are different on paper, but on paper at least, BHP Billiton has outperformed its peers in both profit performance and share price performance. So it would seem if there is pressure on Marius Kloppers, tonight's result has not given ammunition to his critics. And I guess the bottom line in resources is it's a cyclical business. If commodity prices fall, so do profits.
And indeed, there's been some management of expectations that there would be a pullback on CapEx, hasn't there?
Well, a lot of it has already been foreshadowed, so it didn't come as any great surprise what's been announced tonight.
Huge ramifications, I say, for jobs, and I imagine tax and the budget as well. But Andrew Robertson, thank you very much for joining us tonight.
Thanks, Steve.